Hello and welcome to the Worldwide Markets Forex Market Weekly Wrap-Up. We're going to start, as we have been all week, with the euro dollar. Right now we're currently trading at 29.47. The euro's bounced around, ever since, the debacle that happened with Cyprus earlier in the week. We've seen it trade as low as 28.30 roughly, and right now we're sitting at 29.47. We've gotten as high as like 29, roughly 29.80, 29.85. And we're still waiting. The ECB is trying to pretty much force the government in Cyprus to make some decisions and to put some things in play so that they can try to fix their monetary system. And they were going to levy people's savings accounts, and then they said no, and then they said yes. Now it's supposedly a possibility again. So you can see a lot of the indecision reflected in the price here. You got a lot of market chop. One of the things that I'm seeing here is we have a reverse head and shoulders, and we have a gap to fill. So if the news is not, too detrimental to the euro, and the perception is, that it's not going to be that bad, you should see this reverse head and shoulders break the neckline at, 29.80 and fill this gap. If they decide to levy people's bank accounts and there's gloom and doom and everybody's running to the bank and getting their money out and putting it into gold, and then you're going to see the euro reverse, and we'll see some weakness there. So right now you just want to wait and see as far as the decision goes. The biggest problem that we're going to run into is it's 10 a.m. in New York. Markets are going to close in another 7 hours, 6 hours depending on, close in another 6 hours. So if the decisions aren't made, in the next 6 hours and allowing the markets to adjust based on those decisions, you're going to see another gap over the weekend. If the decision comes at 5 o'clock New York time, or it comes tomorrow morning, the markets aren't open and not trading. So I do recommend that if you're going to try to trade it down to the wire, that you make sure you close your positions before we go into the weekend, simply because you don't know what's going to happen. And if you see what happened last weekend, we had a 150 pip gap. And if you're in the market and the market gap's 150 pips against you, you're going to get, you'll gap past your stops, and you'll get executed at a price that you're not looking to get executed at. So just be very, very careful, trading this and trading into the weekend. We'll move on to gold. With the euro strength that came, in the last 12 hours, we saw gold take a little bit of a dip. We were trading in 16.15, 16.12, yesterday, and we dipped down to about 1600, and now we're back up to 1609. So we're staying above 1600. Gold is also going to be pushed by what happens in the euro. If there's gloom and doom and the world's coming to an end, we need to run to the bank to go get our money. A lot of people, are going to be pulling money out of the euro and putting money into gold, which has always been, the safe haven for money when people think that the world is coming to an end. So definitely keep your eyes on gold. If the euro takes a plunge, you should probably see gold shoot up. And if the euro stabilizes and they find a solution that's pretty amicable to the public, and people aren't, scared, then, I think you'll see gold dip back down into the 1580s, 1590s, and then we'll start fresh and see where we go. Euro yen, same thing. We've seen, the yen as being pretty weak over the last few months, and we have something set up here that if the euro does take a tumble, I'm looking at 118.60 as a very large point midpoint on this double top here, we would have a very big double top. And if this thing does break to the downside and it breaks this 188.60, you could see a pretty sizable move to the other side. In the meantime, you're just waiting to see what happens with the euro. The euro is going to determine where a lot of these currency pairs go. Aussie dollar, with the gold strength from the last week, you've seen the Aussie dollar pretty much jump up, over the last couple weeks. We've gone from 101 to 104.50. We're trading right now at 104.29, right above this 61.8% fib level. So I'm pretty much, you want to see where gold's going to go. Gold takes a tumble. I think this will take a tumble. If gold boosts, and heads back into the mid 1600s on poor euro news, then you'll use the 61.8% as support and previous resistance as illustrated here, and trade off that as your starting point. And last but not least, we have the dollar yen. Dollar yen coming off a down week, first down week that it's had in a couple of weeks. We're starting to see some weakness, and if you're a Japanese candlestick trader, you'll notice we have a doji here at 94.88 and right at 95, and you can see that it's starting. This is starting to stall a little bit. We've been strong since the third and fourth quarter of last year, and we just straight up, and we start to stall. We have some choppy weeks, some up weeks, some down weeks, and last week we had a down week, and this week it was not followed by an up week, and we're sitting here with what's known as a doji cross, which is usually an indication of a trend change. So keep your eye on dollar yen. If we do see a trend reversal, you could definitely see some good shorting opportunities here, based on that. That is all for this week. We will start again next week. Just keep in mind, as I said, with all the volatility going on in the markets right now, you definitely don't want to be holding positions over the weekend unless you're a very long-term trader. The last thing you want to do is get stopped out 50 pips past your stop loss because of market gaps. So just be very careful, and definitely try to get out of your positions if you can. Before the week's up, just to protect yourself. Thank you very much for listening. Enjoy your weekends, and good luck with your trading.